Hi, Alexandra. TGIF, everybody. Hi, Paul, LZ. Everyone doing okay? Can you guys see the 10-year yield chart? Hello, Juan, Paul. Everyone see that? Okay, hold on. Morning, Marco. I don't know what's going on here today. Get rid of this. Uh-oh. How about now? Okay. So what I find really interesting is you see the 10-year yield. This was Fed day right here. It's really given everything back from the Fed, right? And you look at the weekly, look at this candle, you know, it rallied to resistance. And now you have a nice line in the sand here for higher yields, would be back over 160. But the interesting thing about it is even though yields are back where they started on the 10-year from the Fed, nothing else is. That's the key thing. So if we drop, will we get recoveries in the markets? I mean, for example, S&Ps are down 60 handles from from Fed day. We were at 42.65 or so. We all know where gold was, you know, 1860 broke $100. Silver was, about 27 and a half. Interesting where silver held here on the daily, held the 200-day moving average. Well, that means I think it's interesting because the excuse for the sell-off was higher, change in language, but the market didn't change. So, if we get this break in yields, we're not going to go back to where we were. So anyway, that's what it means to me is that if you're looking for a reason for what happened this week, you really can't say it's higher yields, right? What was it? Just the threat of higher yields caused crashes in many instruments, an explosion in the dollar. So just the talk, all right? That's interesting to me that all that he had to do was whisper that there'll be a change someday, and the markets gave up as much as they did, which kind of tells me how wrong-footed the whole market was. So anyway, a pretty negative week for S&Ps. Yeah, and we have a 2-week reversal. So I don't know if it's gonna, if this is it for now or not. Nasdaq, uh, decent week. It's like two different worlds. We're still diverging in Nasdaq. Even the 4-hour needed this new high that we had yesterday, where it exploded. And I'll tell you what it means to me. If you notice, Nasdaq made a new high while S&Ps are still struggling. And there was talk while the market was, some of the FANG stocks and everything, that they don't like higher rates, and that was, the reason for their weakness. So I would say that maybe Nasdaq will still have a chance as to maybe even make another high. For weeks I've been talking 14.3, 14.4, and we got to 14.2. So we'll see. Yeah. Okay. And the tech stocks like lower yields. So if we're going to go to 130, which, when you look at the daily, this 200 day is creeping up towards 120. So say we're going to trade 130, you would think that would hold tech together for a while. Good point. Okay, good point compared to inflation, Sansi. Okay. So then if real yields are trending lower, how come we broke $100 in gold? Can you explain it? How come the dollar exploded? Can you explain it? Safe haven? That would mean just cash. I mean, I don't see enough selling in risk like equities for there to have been a big dollar rally. Okay. Maybe this is going to be part of another wave that gets us to 92.50 or so. But anyway, you really can't deny the strength in the dollar on a weekly basis. Okay, I know that everyone's saying, myself included, I was wrong. Hear those words? I was wrong. Okay, because we got much more strength than I was anticipating on the Fed, and I thought that we were going to clean out these lows before we had a more important turn. And I don't know. I certainly can't sell the dollar here. So just giving you my perspective of how interesting the markets are. That everyone will say, "Oh, the markets are going down," and that could be. That could be. But I'm just saying it's interesting that the reason reporters, not traders, and neophytes. Yeah. Interesting, Ben. I'm glad you're going to be with us next week. Okay. So, we've made a couple of new highs, Ben, in S&Ps. I was going to wait until month's end to put something on. I'm still going to do that. See what happens for taking some put positions in NASDAQ by month's end. So we'll see if it falls apart before then I'll say to myself next. And next is a good segue for bringing Blake in. Blake guided you guys, couldn't have been any better for what to do on the NFP if certain levels were violated or taken out to be long dollars. So, Blake, nice guidance this week for the whole team.
Thank you. I'm a little concerned with the market and the way it looks right now and the potential that it has in the event that the S&P actually sees a little downside. And I'm going to say right now that things are going to change for me and how I approach the market if we start to see a little bit of a move here. And so that's kind of what I'm looking at right at the moment, is just like, and you can see the S&P here.
Failing
here's
rally.
your 4 hour, this is your ascending wedge. And I'm getting really to that point where I'm going to start looking for some reversal and risk here. And it's the wedge is very well defined. And we held it this week, and you can see the lows. And so today's Friday, obviously, if we start trading into new lows this week for the week, and we close at new lows for the week, the next week's going to be a doozy. I don't necessarily know that that's going to be the case, but I'll tell you what, the dollar has gone a lot farther than I thought it was going to go, and the dollar's strong. Look at the Aussie right now. Aussie's breaking down. I mean, we're at this is really the only chart that's got my attention today, right at this morning. The Aussie is breaking down. I mean, we're coming out of this triangle. I actually closed my Aussie short yesterday. I was trying to trying to squeeze out a sell overnight. My order is at looking at it right now, 75.80. So no dice. I didn't reshort it last night. I had an open order, and we made it as high as 75.50, and it's trading heavy, Dale. I mean, what? Yeah. How many people are trying to buy the Aussie dollar? As I pointed out yesterday, we were sitting on the 200-day moving average. We had some horizontal support. How many people are just buying it, saying, it's oversold, right? Yeah, it's oversold. Yeah. I can't go any further. Of course it can't go any further than that, right?
Well, falling knife.
Yeah, actually, there's a great article that was just posted by Forex Flow. Here it is. The art of a catching knife. This is great. It was just as you said that. It was
very creative. Yeah, nice.
Yeah, it's great. But I mean, how many of us have tried to do that in our careers? And it's dangerous. It's extremely dangerous. So I guess thanks for the kind words. I think we were pretty well prepared going into FOMC, but it was more the reaction as soon as it happened. It was go time, and we knew exactly what to do. Now I'm gonna usually I bring in Steve and Stelios to talk for the next few minutes. I want to cover a couple of things, because this morning you guys are in for a treat. You guys have Paul Franco here, and Paulie, for those of you that don't know, he's our host of the European crossover webinar. So if you go over to our webinars, you can see the European crossover. It's he is I'll talk a little bit about Paulie. I wanted to do it here in a minute, but I will talk about him just in a minute, but I want to cover just a couple other things. But I'm excited for you guys to hear him, because I know a lot of you, you may see him on social media, but you don't really hear his voice, because he's doing the European crossover, and it's for Forex Analytics subscribers only. Paulie, I met via Twitter, I think about a decade ago. And, he's been a full-time trader. And I think I brought him in to the Wise Trade group maybe like 7 years ago, to do a couple of trainings, and then eventually brought him over here like 5 years ago to Forex Analytics, or maybe 4 years ago. I think it was a year after we started. But anyway, but he's, he trades full-time, and I'm jealous because he has a nice Porsche. So so anyway, I'm excited to have him here. So let me just cover a couple other things really quick before he comes on. He'll be on in about 2 minutes. If equities trade to new lows in the week, that means we have to really break below 4170. The thing that's on my mind right now, the most actionable idea I can give to you guys is this. You got to look to sell commodity currencies, and you got to look to sell emerging market currencies. And that's it. How you decide to express that idea is, up to you. I'll give you my best idea right now. Okay. I'm going to give you guys my best idea. And look, you guys aren't even, well, some of you are Forex Analytics subscribers, some of you aren't. But my best idea is this. The Euro New Zealand breaking out of a wedge, breaking above the 200-day moving average. So if S&Ps do break lower, there's the room right here between 170 to 173. Nice. How's that for actionable ideas? So you guys run with it. It's channel high. It'll take us back up to the 618 retracement. It's not like it's disrupting really any, major, trends here, and have fun with that. All right. So Paul Franco, are you here?
Hey, Blake, I'm here.
Hey, Paulie with a P. Paulie with a Porsche 911 that I'm so jealous about. My kids are going to be out of the house in like about 3 years, and then I'm going to revisit my old Porsche days. So how you doing, my man?
I'm doing pretty good. It's been some wild action over the last couple of days. Post FOMC, everything looked like it was going to heck in a handbasket, at least on a short-term basis, as 5-year and 10-year yields blasted higher. Then all of a sudden, we just did a flip-flop, hit the lows in Asia. And then we came back yesterday with gangbusters with the NASDAQ, hitting new all-time highs.
Well, and today we're reversing the lows. Now, there's a little bit of talk about options, but before I'm going to pass over to you, I want to just say that, Paul, I've known you now for over a decade, and it's funny, we've never even met in person, which is the craziest thing in today's world. We met via Twitter. You're one of the very first people I followed on Twitter, probably within the first, I want to say 20 or 30 people that I followed on Twitter.
You're one of the very first people I followed also too.
In that wild, and that was probably 11, 12 years ago. And I had a great deal of respect for Paul Franco because I could tell, obviously this is a dude that trades every day. And he's, very in tune with the markets. And I eventually, it was probably 10, 11 years ago, brought you on just for, to contract with us at the Wise Trade Group. And then, after I left here, or maybe it was like 9 years ago, something like that. But anyway, after we started Forex Analytics, about a year after we started Forex Analytics, I brought Paul over into our family here because I missed him. And I thought he would be great for our traders. And he's been a daily staple for our traders in the European session every single day. So I thought it'd be a really nice opportunity for you to take over the screen and talk a little bit about your methodology and how you attack the markets. And, Paul is a great example of somebody who's really, he stepped away from currencies, started trading a lot of indices, and because that's where the volatility was at, and he really bridged that gap over the last few years. And I think you guys could learn a lot from Paul Franco, not only right now, but for the next 10, 12 minutes, but also on a daily basis. So Paul, I'm going to let you take over the screen and kind of give people a kind of a flavor of what you do every day.
Yeah.
And by the way, and Gene said, I have a non-sexual crush on Paulie. Thanks, Gene.
So how do I go in and?
I'm going to stop sharing, and then you should be able to grab the screen right now.
Okay, great.
Yep. You also called him Mr. Grumpy Pants.
Mr. Grumpy. No, I thought he was calling you Mr. Grumpy Pants, but anyway.
Yeah.
Do you see my screen now?
Yes, we can.
Yeah. Okay, great. You see the S&P right here, correct?
Yes, sir. Correct? We can see actually, and all of your other charts. That's just in the middle. So.
Oh yeah. Okay. But everything on this page. Okay. Yep. And then on a separate page, and I'll just quickly flash back and forth. Let's see, and then here's where I have the NASDAQ. So it's basically the same screen type setup, but I'll flip back to the other screen where I have the S&Ps, and also we have the, bear with me one moment. And you can see the euro in the right corner where we're doing the analysis earlier for the European crossover webinar. And as Blake said, yeah, when I was trading more actively FX for quite the time, but when I saw more volatility, like many, as my dad used to say, many moons ago, I did used to go and trade the E-mini, and then I migrated to FX. You can just tell how long ago that was, when basically FX was the only true 24-hour market. I mean, where you would see so much, and so much volatility was there. But then as in the last, couple of years, things have moved so much with indices. That's where I went, as Blake said, due to the volatility. And even then, I've kind of evolved. Of course, I've always stuck with the charts as far as what I like to say is just the levels. And when you look at my charts, I'll try and keep it and let me know when I do need to go and cut off. I always put my resistance. I never put my resistance through the high and the low, because the thing is, how many people sold the high, how many people bought the very low. So I always put my resistance, you'll see here, through the bars. This just happens to be a 2-hour chart. Primarily, I'll use a 15-minute chart. But as you notice in here, my whole idea with that is, regardless of whether you're trading a half hour or an hourly chart or a daily chart, in this case, it's a 2-hour chart, to me, the close of that bar, we referenced this yesterday in the chat room, not yesterday, but a week ago today, the importance of, it was a Friday, I was saying the importance of a weekly chart, and we were talking about markets were hitting some key levels and whether to fade them, and it was a good idea not to fade them at the time, and that was my point, was, hey, it's at the end of the week, these markets are pressing, made in a little bit of a joke in the sense that, you'll have a trader that's under the water and saying, risk manager taps him on the shoulder and he says, okay, don't worry, I'll be out by the close. So once again, it's the close that makes the difference. If you look here, this is a 2-hour chart, but you look right here, look at the close right here and how important this bar going against these closes, how key that is. And once we break above it, the market keeps going higher. As we find some sea legs or get some legs below it, same thing. And on the rebound, we run out of gas there. So I always say it's the close that matters, because at that point, then you really have to say, you know what, I'm wrong on the trade. I need to get out. Whether it's up, you're based on a half hour, hourly, 2-hour, daily, or in the case of weekly chart, we are starting to see a pretty good fade here in the S&Ps. And I was talking mentioned to Blake in the chat room yesterday, and was saying in the chat room, one of the big concerns that a lot of seasoned people, at least seasoned guys, have been talking about is the horrible volume that we've had over the last couple of weeks. And I was pointing out, I said, you know what, look, this thing is making new highs, and primarily the NASDAQ that they made all-time new highs yesterday, but it's made it on weaker volume. And one of the things I mentioned in the chat room this morning was, you can see here that although the ranges had been very, very tight, or let's say restrictive over the last couple of weeks, we're now starting, the ranges post FOMC, now we're starting to see these ranges widen out. But as you're starting to see here, now we're breaking lower here at this point. And this is interesting. I know someone was mentioning I think there's some type of a dividend thing that was going on, and the gentleman was saying, hey, it's going to open lower tomorrow regardless. I don't follow too much of fundamentals, but we're certainly pressing lower today. But when you look at some of the key levels that the market is going to be looking at, and I'll just take a look here with the S&Ps.
And Paulie, once you do that, can you explain to everybody all the charts that you have on your screen, the separate charts, and what they represent to you once you're done finishing?
Okay, and the only reason I'm focused on this, because this is really starting to move, and kind of like what you said, that you referenced the art of knife catching. Boy, I've been there myself. Like I said, I always tell people, sometimes I'll share things in the chat room and I'll say, it's not because I know anything. All I'm doing is sharing because I've made every mistake in the book. You see what I'm saying? So please learn from the mistakes that I've made, because I've been there and made those dumb mistakes. So I try and point things out to people, not like, oh, I know so much. No, just I've seen that movie before, and I've been a star in that movie, getting crushed. So, but the key levels that they are looking at today, surprised that we're even breaking this far at this time, but I think we've got people that are in positions that from up in here that are in weak hands and they're getting knocked down. But today, focus on this 41.65 and then also 41.55. If we get down there, a little bit surprised, maybe we'll try and make another run a little bit once we get open. But those are numbers that I would be focusing on that we saw leading up to here. Remember, 41.69 was huge. You can see 41.66, but 41, let's just call it 41.69, 41.55, 41.42, at least for now. Now, as far as the different charts on the screen, I primarily just scalp. I day trade and scalp. Is just not my nature to sit and trade for very long. Obviously now with the way indices are, you can see today, you don't want to be doing that. but I've never had the personality, the temperament to hold trades. I always tell people when we trade FX, I'm never going to be the guy said, and we've got people that do that. I saw that Jane in the chat room, and she caught the euro yen for, I think it was like 250 pips or something like that. I'm never going to be that guy that can do that. It's just not my temperament or personality matches to meet that. So I trade more shorter term, and that's why the indices, primarily the NASDAQ, work really well. Now, as far as the different charts that Break was alluding to, I do use a profile chart, and I'm not profile pro or anything like that. But what I do try and do is I try and look for the term I learned from Blake a long time ago, which is confluence, and I'll look for areas where when we're breaking higher. Good point yesterday was when we were breaking higher, I was thinking, I was saying in the chat room, hey, look at 42.14. That's I think that was our resistance initially. And I said,
what do the axes here represent? And what is that? What do the boxes represent?
Okay. Yeah. Well, the profile is going to be, each box is going to be set up on a 30-minute, and over the course of a 30-minute bar, let's see if I can make this wider. Each box on here is going to, there's probably a lot of traders on here that do use a profile, and the profiles has become very, very popular, especially when using it with indices. But you'll see that right here is going to be, and I have the profile set right now for the full session, which is from 5 p.m. Central Standard Time all the way through the next day. If I set it just for the regular trading session when we open, you can see we're blank because we haven't opened yet. So when you look at that session, which was just the U.S. session, you'll see that here we've got the open. The first hour is going to be what they call the opening range, and then each letter. Let me see if I can scoot this out to make it a little easier to see. Each letter, it's going to be comprised of 30 minutes. So you can see when we opened up here, you've got the letter A here. For the first 30 minutes, you can see this is what the market was doing. Running here, we ran all the way up at the time. And I remember I was telling the guys, I was like, hey, 42.21, that's going to be key resistance. I was even surprised. And we ran out of gas. And of course, I was on the wrong pony. I was trading NASDAQ, which I did okay yesterday, but S&P just completely fell apart then. You can see here, trading all the way here to A, and then all of a sudden, we roll over to the next half hour, which is B, and look, we go all the way down here. We went all the way down to 42.03 before we finally found some bids and started to kick back up and jump back into, you can see the C. The C is going to be the next following half hour, and what it shows on here is. The gray area is going to be what they call the value area, which is going to be where you'll see 70% of the market being traded. You can see here what's basically like a histogram, okay? And so you have here almost like a bell-shaped curve. So the longest part of the curve, or where the most trading is going to take place, is going to be the point of control, which is sometimes referred to as just a pop, which is right here.
That's interesting. So it's like it's a chart that really shows you how things can revert back to the mean at those levels.
And there's areas too. When I use it for, like I said, I'm no, like I said, I've used profile many years ago and read the book that what's his name put there. It's on the internet if you want to read it. It's for free. CMA puts it out, but it's a long book and very, I don't know, like. It'd probably be a lot easier to learn by just looking up some videos and start to get practice, with that. I'm going to flip this back to the
interesting. Hey, Paul, we have about 2 minutes before Brianne comes on, but I really wanted to point that out because I think this is one of the really, especially when
Blake, you have time.
Isn't she coming?
I sent you on Skype what you said today. So yesterday she forgot, and today she had a meeting.
And today she's here, right?
She's not here.
Oh,
I rescheduled for today, and she couldn't make it again today. So that's what I Skyped you.
Well, you know what? Then Paul, continue on.
Yeah.
Sorry, it was a total miscommunication on my part. For some reason, I thought she missed yesterday. She was coming in today. Paul Franco
got yesterday, and she couldn't come today.
My bad. Okay,
All right.
continue on. Sorry.
Okay, so
You
let me
guys are
go,
in for a
and it'll
treat
probably
then.
be easier if I flip onto the screen where the NASDAQ is, because the screen is, you can see it more detailed. You can see the profile here. And the
Yes.
way I use the profile is generally what I'll do is I'll look at as we're breaking down, we are breaking down, and actually I reference this in the bias chart today in the European crossover webinar. You can see here the NASDAQ I have at 14,052 for today's support. Look where we just bottomed out at 14,047 or 14,048. So what I was doing is, and we were using the profile today. We don't use it as much. I mean, I might reference it in the the NASDAQ, but we use it a little bit more. We're looking at it in the euro. We looked at a couple. We're looking at gold and crude using the profile. And what I'll end up using, as like I said, I'm not no great aficionado or whatever, but I'll use it for, once again, like Blake says, I use it to go in and find confluence. And so I was looking today and I was like, oh, I don't think it's going to fall there, but just in case. And we were kind of toying around. I said, I kind of like this area here. And I was saying, if you look here, here's 41, here's this, here's, and I go, here's the pop you see here from the other day, point of control. And I'm like, okay, so there's 1435. Here's this 14,060, which is the value area high. Sometimes in the chat room, I'll say, hey, we're coming into the value area high, which even though it's a high, and someone said, what do you mean a high? It's falling. Well, I'm just saying is it's coming into the support, 14,060. So when I looked here, I said, oh, there, you got a little bit of confluence here. Here's 14,048, 14,052. Here's 14,060. Okay. And I looked for confluence and said, okay, so I typed it in. And I said, okay, support for today, I'm looking for 14,050. I don't know if it's going to make it there, but that's where we got some support that would come in. Well, what do you know? Wham, bam, thank you, ma'am. It goes and comes right here to, makes a run right here to 14,048. But as Blake said, you always want to be careful not trying to catch a knot. You're better off, and I've found, like I said, I've told you I've made all the mistakes I could possibly make. But what I've found is, for me, is it's much easier to just go with the trade right when it's happening. So as we start to go in and break out of this range, you don't want to be trying to buy that little support area there. You're better off just saying, okay, let's go in and short. Okay, we're breaking lower. Okay, we're breaking support here. Look over here on the 15-minute what happened. We're breaking support here. Where can we find, we're breaking support. I'm getting short. Where can we find some support? And once again, it's always good to have your levels in place, because that way you're not taken by surprise, or either mark them off. Sometimes, not all the time, I'll be marking them off as key levels. To me, this would have been extreme if we got down to 14,030. I probably would step in and buy that one. But once again, it gives you an idea. Now, Blake mentioned, what about the other charts? Well, once again, because I trade so short term, I'm always looking at trying to get some kind of an edge. Something will go in and help me. Here's another chart where I have the cumulative delta. And with this cumulative delta on this particular chart, you can actually size the trades that you want. So I've got it as small trades, large trades, very large trades. This is a software program that I even made a note on Twitter just a couple of days ago. It's called Edge Pro X. It's just that I'm really happy with the tools that it has to offer. So I'm able to, you can actually edit those. So I put, for small trades, since NASDAQ doesn't trade the same way as S&Ps, the volume isn't as high, it's more volatile. I put the small trades from, I think, 0 to 9. And then for the larger trades, I think I put it from 10 to 35 or 30, I'm not sure, and the very large trades above that. And one of the things I've referenced, I even mentioned it in Twitter yesterday, because Blake said, and I do that just to go on and share information. And I did mention this in the chat room too. I go, if you look in here, and that was yesterday, I go, the large traders have not participated in this move above 14,000. The larger traders, the large trades, they did go in and participate in this thing, and they actually did pretty well, because they were actually selling this thing as we got to 14,180 yesterday. They covered around the 14,080, and you can see here there actually have been buyers here. I guess probably coming into this with the options expiration. But that's just a tool I use basically to kind of give me a frame or a context of where we are. One of the things that when we came in yesterday, small trades were very, very short the market. And then when we flipped the other way around, they were very, very long. And you can see here at the bottom here, they're very, very, very short. And then here on the other side here, I basically have the same setup here, except that I do use the heat map. And where this helps me out, and I showed this a lot in the chat room, and this is exactly what I was talking about. So let's say that I told you we're breaking earlier, and this helped me yesterday quite a bit. And you can see now we hit some pretty huge volumes. Boom, boom, boom. Think of it like cannons going off. You're like, holy smokes, we're really going to start to see some damage. Well, look at this, where this is happening. We're here, we're trading along, plunkly, pluckly, pluck, and all of a sudden they hit them, wham, wham, wham. Then you know, wow, I got something behind this. So once again, even if you didn't come in till 14,090 or from here, you know what? They're going to press them. If they're hitting them that hard, they're not going to come in and turn around and start buying them. And before you know it, like I said, we make it all the way down here to 14,052. The way I use that is really for, I wouldn't say momentum, but it tells me, as I'm looking here and I'm looking at the volume that's coming out, I can see that. But when I saw that yesterday, it happened to be, I think it was like 14,120, yeah, 14,130 or something like that. All of a sudden, holy smokes, we started seeing some heavy volume. I got short. The market was really quiet, even though it was some heavy volume. Next thing you know, it just starts breaking pretty hard. I covered half, and then I covered a little bit more, I think around, covered the balance, like I think it was right here at that 14,080. But the point is I'm just trying to show you how I use those tools, not trying to say, oh, I got this, I got that. I mean, I have my share of stories when I get shellacked, but this helps me actually to a certain extent to keep me out of trouble, because I have been one of those knife catchers. So now I try and use all this stuff as a composite as to what I should be doing. Ultimately, I do like to use my levels. That's what keeps me going. That's what keeps me in the market to know, okay, where are we at? Good case in point, yesterday as we were coming out of FOMC, I shared on the chat, I think I may have even noted it on Twitter. I said, hey, this 13,957 is a pivot. And if you look at it here on the daily chart, you can see the significance. Once again, remember I told you, I always like to go with the bodies. And you can see here we had this medium-legged doji. And what that means is generally when you have a medium-legged doji, it means that bulls aren't in control, bears aren't in control. And the way I look at it is, okay, we finished in the middle. So what does that tell me? What has been the most recent direction we've gone? Well, we've been going higher. So if bulls aren't in control and bears aren't in control, and we're here in the middle, chances are we're going to regress backward. And sure enough, that's exactly what happened. So, but where was this key level at? That body was 13,954. So when the market went back on the upside, and we rallied up, I remember saying in the chat room, and I didn't participate on the long side, but I was saying, hey, look, it gets above that, then it's just bullish. You can't even deny that. And even that it was one. This was the key level that we talked about. I think it was 2 Fridays ago, and I said, and I remember trying to short it, and I'm like, we got it. You got to cover, no matter what. Someone's got to cover. Once you get above 13,715, and it's on a Friday to boot, I go, because we stayed in this range throughout that whole almost a week and a half, and then we took off. So I always like to go with, as I told you, the levels, which I put them through the bodies, because once again, whether it's the lower body or the upper body, I always say that's put up or shut up time. So you can see once we got above 715, there was no denying it. Now the market kind of pulled back on Monday, but then, and we here, but there was no denying that the bulls were in control, and finally we launched up. So you can see the significance of 13,954. So when we broke them past FOMC, then we got that added move. But as I told you, what I found here was the large traders really played this really well. They came in and I saw them buying it. They actually started buying it. I think around, it was the right here, it was around 60, 65 to 50. And we kept on breaking, but look what happened. By the morning, yesterday morning, man, we were scooting. And like I said, you got to respect the levels. That's why I have this highlighted in this pink or magenta, whatever you want to call it. I put that different color so that it stands out. So if I'm not paying attention or I'm looking at this, I go, oh, wow, it's going to jump out. And I'm like, holy smokes, when I saw this yesterday morning, I'm like, well, I'm not going to go in and touch it. I go, I'm going to wait till the U.S. Open. Let's see what happens. And so I jumped in, grabbed a couple of shorts, but I was being careful because I'm like, whoa, you got to respect the levels. And once again, that's where I use the different tools that I have in place, because I'm just day trading, scalping. And then the profile gives me areas where potentially this market can go in and go to. So once again, we're looking at whether we're looking at the POC or one of the other things that I'll look at and I'll reference a ton is going to be the week's the point of control for the week, Devon's point of control. So you can see this is the entire week laid out. Some of y'all are probably really experienced, and this is a feed that even if you see I can put orders, this isn't connected to my account. It's just that it has that option, but this is just a feed that so it gives me that data. But you can see here, there's a Vine point of control. So had we broken, and we did come into, as I told you, our bias chart support for NASDAQ, which is 14,052. And I think what was the low? Let's take a look here. The low was 14,051. Oh, holy smokes. That was good. That was with 1-1. But that's not anything great that I did. All I did was use the reference spots, as I told you, from the profile. And I use them like I learned from Blake. Confluence. You know what I mean? Do I see it hitting with another thing that's hitting another thing? But once again, like I said, this would give me a lot of encouragement to come in and step in if it matches up my levels, is right in here. There's the week's volume point of control, where the most volume's been done, and that's going to be at 14,000, basically 14,020, 14,000, yeah, right there, 14,020. So once again, I told you, I go, if it had broken down, I was referencing, if it had broken down to here at 14,030, yeah, I'd probably go and step in and take it long. Yeah, and I'd have a lot more confidence because I'd have some confluence there. Not only would I have using the profile and say, wow, this thing is really overdone. Here's 14,020 was the midpoint for the previous day, and that's the full session, not the regular trading hours and some other areas. But that's how I use it. That's how I use the tools because I am looking at short-term trading and I'm looking at momentum. That's the one thing I'm looking at. So yesterday when it was making those highs, and we are a little bit in some trouble here, but I'll look at that and I'll look at what I'm seeing, what's happening with these small trades versus the large or very large. These large trade guys, man, they've really been playing this thing like a fiddle. Buying it in the Asian Open from the evening before, and then turning around and selling it around 14,180, and then turn around and buying it back. They stepped in. I could see it here at 14,080. And I myself was going to take it long, and I didn't. I just chickened out like a dummy. And I had actually stepped away for lunch, and I came back just to give myself a break. And I I didn't see the price action, but that's a pretty good area. And I didn't take the long. And sure enough, they were stepping in and buying that long. And I'll be doggone if we don't run back to the highs again and even make new highs. But that just gives you an idea of the way that I use it. And it works perfect for me because, like I told you, I'm not a buy and hold or sell and hold kind of guy. I'm not jumping in and out real fast, but I do try and look at the setups that the market information, or like people call MGI, market generated information, gives me, and I use that to go in and basically ride that ship or ride that wave, either lower or higher. What I used to do is I pick levels and say, which I almost saw myself yesterday doing the same thing, because I was sharing where the Fibonacci's were. Like, oh, here's 61%. I'll just jump in and sell it, and I would do that, and I would still do it. Not even that long ago, and then the market would just keep on going. I'd be, holy smokes! So these tools have helped me to put things in context, and this helps me more. I know people use these tools differently, but that's the way I use them. I use them to see if I'm seeing momentum or lack of momentum. We get to an area, and I see all these fireworks going off as far as more volume, and I let the market tell me it's kind of running out of gas, then I know I can ride this sucker. And like I said yesterday, I put it on like, oh wow, nothing's happening. But over time, it finally started falling and started breaking lower. So I don't know if you have any questions, Dale or Blake, but anyway, that's the way that I look at it. We do go on and cover in the European crossover. We'll cover the NASDAQ. We'll cover Bitcoin, all the majors, Euro, Cable, Aussie, dollar, yen. And today, actually, we were using the profile, looking at some things with the Euro. We used the profile actually with gold today and with crude.
Paulie, you have the mentality of a floor trader, only you're a great technician. So they didn't have the tools that you use. They mainly did X and O's in the pit, but you sound a lot like the guys I used to know and work with on the CME.
Oh, okay.
Really?
Well, and I've learned a lot from traders along the road that are very experienced, seasoned.
Oh, there was
traders.
there was one question from Paul. He wanted to ask you if that's a market theory chart bell chart, which he matches with support resistance zones.
Oh, you're talking about the profile here?
Yeah, he's calling it a market theory bell chart, or
yeah. I mean, you'll. And like I said, I don't pretend to be. Trying to think, can't think of the right word, but I just went into market profile many years ago, real hardcore trying to. I'm no aficionado. I hadn't used it in a long time. I started getting back to using it again. It seemed to work very well with indices, but you'll see here that, and sometimes you're going to have these sessions. And I do like to flip them back and forth. Sometimes if markets trade in a more tighter range, I'll go in and flip it back, because some people will only use the regular trading hours, RTH.
Yeah.
I'll flip it so I can look in there and say, okay, where are we coming to? If you look in here, matter of fact, take a look at this. Right here on this low from that prior day, happened to go right into the value area low right there. You see here? So lots of times I'll use that as confluence. I'll also look at one thing I will say, and I mentioned that yesterday, is you'll see here that the market will often use, especially like the point of control, they'll sometimes almost work like magnets. I'm just saying is that, and a lot of traders will do just that as they go in and build positions here, and they're looking for the market to run. They'll look for it to run towards the point of control, and they'll just hang on. I'm not a person that generally will hang on, but sometimes I'll be amazed. I'll use that as an area where maybe I'll see a pullback, but I'm amazed how a market will just continue to go on and keep on going until we get right to I'll share it in the chat room. I'll go, oh, there's the POC from yesterday, the day before, and I'll be doggone if the thing doesn't go on and run up there and ring the bell, and then we start to come back. And lots of times I'll go in and fade that as it starts to come back. If I get it, looking at different areas, but I have more of a harder time going long, which sounds kind of nuts since these markets have been just that. But
okay.
This has helped me in so many ways to kind of see, despite being a short-term trader, how the market has set itself up to go. I mean, and I mean go for the day, or where there's targets. So you can see here, I have this preset, or you can set this up for those values. So I have it for the value area high, the value area low, and then the midpoint. Quite often the guys on, I would say the floor, if there's no floor anymore, they'll look at, of course we look at the 50%, but they'll look at the midpoint for the day's session. So that's why sometimes I'll go in and pop in from the full session, which starts at 5 p.m. Central Standard Time, rolls all the way to the end of the day. I'll just go straight to the RTH and say, okay, well, what's happening to RTH? Where is the midpoint? Oh, wow, that does come in. And it's going to be obviously different from, the midpoint for the full session. So I'll look at that. Another thing I'll go in and take into consideration is I'll look at the VWAP, and I have that on the 15-minute chart. So once again, I didn't update the VWAP, but move it over here to, bear with me, 15-minute. There we go. So you can see here, this is a pretty good thing too, as you look at this. You can see here the market's just trudging along, and you can see here that we're bumping. We get below that VWAP. That's quiet session, so you can't necessarily make a whole lot of hill of beans of it, but here's the deal. It keeps bumping. It can't take it out. So you know that it's open to slide back, but it was under option expiration. So when we break lower, when the market comes back, if you're looking for areas that will then look at resistance, I'll take that into consideration. I go, oh, wow, well, look at the VWAP right here. It's already dropped down. It's going to have a tougher time. It's just one more thing that's going to push the guy's head underwater, and you can essentially go with it. And one of the things I do like to do is maybe not so much on the 15-minute. Sometimes I'll look at other bars, and I'll look also at the 30-minute. But if we do get something like an engulfing bar here, then I'll say, okay, well, wow, it looks like we are set up now and I did have that happen yesterday. That helped me get short when I saw all this action start happening here. And I go, okay, well, we've got the setup, the bar engulfed it. Okay, we're open. Now, like I said, things were pretty quiet here, but you can see here and more importantly, as you can see here, we right here at that open and look at it engulfs quite a few sessions before. You see that? That really opens the door and say, wow, we're starting to turn. We can now turn because there's going to be some systems that are going to kick in and say, wow, that they're short. Okay. So I know I've got that going for me. I'm like, yeah, but it's quiet. Okay. Well, then I look for other things that may be breaking. And then once I see it that it's starting to go and break, as I told you, well, where can it potentially go to? Well, like I said, we had that at 14,052. But once again, it wasn't anything great that I picked out. I just went to the profile and said, if it breaks, where can we go? Where can we go? And certainly we looked at some confluence and said, wow, you know, there's 60, there's 38, there's 48, okay, 52. And then today, below just happened to be 51. Doesn't happen like that. But like I said, you know, that's how I use this as basically like like Blake says, like a confluence. And I use that for my style of trading, which quite often now these indices do go rather, you know, kind of go like Heckle and I was going to say Heckle and Jekyll. I meant to say
God,
Jekyll. I know.
Haven't heard that one in a while.
But exactly. But Jekyll and Hyde, the way they go and move. So you really do have to really be. That's why now I don't say I don't have time. I'll kind of know what's going on with FX. And FX is where it really got things going. It was really very successful for me. I traded S&P way back when, and I wasn't, you know, I couldn't understand it. I just like, this is crazy. It doesn't make any sense. Now they want to buy them or whatever. And then I migrated to FX because there were so many opportunities, and it was 24 hours. And of course you can say, you know, E-minis and indices are 24 hours, but these really are 24 hours in the sense that, you know, you'd have the Asian session, then you'd roll into the European session. So you could get good movement out of FX. But like I said, volatility started narrow because of, you know, the ZERP, and we just didn't have these big disparities. So then I started to migrate into indices, back into indices, and then my main thing here is to trade NASDAQ. Although yesterday S&P was the big mover. Like I said, when it got to 42.21, and it went to 42.03. I mean, lickety split, and no quick thing. And I did indicate. I mean, it was in the chat room. I said, well, that's going to be really good resistance. But I didn't think we'd turn around and fall apart. But that's how I go on and use these tools to go on and make a determination. So I don't say it's fly by the seat of your pants, but I use those as momentum, and then I'll use my levels to find out, well, where are we at? We're still bearish until we're still bullish. Try to take that into consideration. And then I do try and look at the backdrop, bigger backdrop. And like I shared in the chat room, I know on here, I go, man, you know, a lot of seasoned traders have really been balking over the last 2 weeks that the volume's been horrible. And I said, if it's going to break, look for next week. I'm not saying it's bearish, but it's going to be very vulnerable. And sure enough, look how quickly we fell.
Yeah.
I'll go back here in the S&Ps. I will go on and note, I was listening to you earlier, and someone was saying about the dollar. And I'm going to go on and my dad used to say, no, now it's not. That phrase is back popular again. My dad used to say, I'll give you my 2 cents on it. Well, here's the deal on the dollar. And below, I'll say, I've been the dollar's biggest bear bear as far as talking trash on this sucker like nobody's business. And but I did go on and point out in the chat room, this was like about a week even before the FOMC, and I thought the dollar was really going to get, taken for another loop. But one of the things was key dollar. Lots of times you don't want to focus just on the news, because the news hasn't had the chance, whether it's rates or whatever. The dollar's had every reason to completely fall apart. I mean, every reason. And people have been writing the epitaph of the dollar. Like I said, I was bearish the dollar. I remember, I'm not going to say who, but someone's like, oh, we're going to get to 95 and all this other stuff. It wasn't Blake, but I'm just saying somebody else. And I was like, I don't see that happening. I just don't. This was before. This was on this move back here. I just don't see it happening. And sure enough, we went and we fell right back down the hill. But here's the thing is, and I shared this in the chat room, mentioned it several times even in the webinar, was we just can't seem to break lower. We can't break lower. Okay, we get the FOMC. The rates yesterday, I mean, they just dropped. And it was like the crazy. I was going to this CPI, I was like, man, soybeans are this, corn this, crude oil, lumber, copper. And I'm thinking this CPI, we're going to go bananas. And it just lays a thud. and then interest rates just keep falling. I'm like, but this dollar just doesn't want to fall anymore. So to me, it's all technical. And we said that last week when the Canadian dollar was breaking out. And so people were thinking about selling it. And I go, don't sell it. I go, you're going into a Friday. I go, people are going to have to get out. And
that was a tell, wasn't it? Canada came out of the hole first. That was really a nice.
Well, it had been under so much water for so long.
Yeah.
But with the cash dollar index, it still remained quiet, but it can't break any lower. So my thinking would be, from a technical standpoint, people started putting their stops a little bit closer, a little bit closer, a little bit closer. And once we got a close above this opened the door. I didn't think we'd get this far. Now, 92.06 is pretty key. I showed that in the chat room today. You can see right here, 92.06, pretty key level. Look at that. You see?
Yeah.
All these touches here. But here's the deal. It's Friday. Nobody's going to stand in the way of this sucker on a Friday. It's the same thing with the dollar CAD we saw last week. We rallied on the dollar CAD, and somebody was like stepping in, wonder if I should short it here. Why are you going to short on a Friday? Anybody that is holding it is going to have to get out. And so on a Friday, that's the last thing you want to do on a Friday is try and stand in front of the train, because everybody else is short. They're all buying it back. And if it dips back, anybody who's short is going to say, wow, I got the opportunity to buy it back. So I'm not going to say necessarily where it's going to go here. And I always like to get 2 consecutive closes. So I'd like to see 2 consecutive closes above 92.06. If we can get that, then the next target, once again, I'll never go with the highs or lows. I go with the body, and that would be right here at 92.88. But we need 2 consecutive daily closes above 92.06 before we can necessarily get that. You'll see that lots of times. The market will break low and they go, oh, it broke support, but the next day it's right back into the range again.
Yeah.
But that's my 2 cents on the
great presentation, Paulie. For anyone that wants to learn how to be a scalper or day trader, you just saw it, you just heard it, and you could immerse yourself into what Paulie does.
And you know what's really cool is he's in our chat room all day long. I mean, I love having Paulie there because he's obviously immersed in the markets, but his knowledge and his ability to see momentum as it's picking up, and
just Paulie is worth the subscription alone, in my opinion.
Say that, yes.
Thank you, I mean it. Okay, Paulie, great job.
Okay, thank you.
And really appreciate I learned
a few things. But I did want to share one little thing real quick that we were just touching on, and real fast. I talked to. Remember, I just said here the large traders are stepping in and buying it right here. Right. That was at 41.52. Look, we've already hit. Yeah. We've already gone 50 handles on that.
Nice.
And that's the way I use it. So there's no magic button or something. But that's how it's kind of like, once again, I've learned from Blake. Is that you'll see these my word then would be disparities. So here we are falling apart in the NASDAQ. We do come down to this bias chart support 14,052. One of the things I notice is the large, look at the small traders, they're selling into the hole. You see what I'm saying? Yeah. And look at the large traders, they started buying it 60 pips ago. So you see what I'm saying? So that's the way I use these tools. It's nothing great I'm doing. I'm just observing. One of the things I just do is I just watch and go, wow, well, at least I know one thing. Hey, dummy, don't try and sell this thing. Yeah, I guess I better not sell it. I'm thinking to myself, but that's what I'm saying is, so if you're coming into some support, we had the confluence with the profile. We had our bias chart short report at 14,052. And I'm like, the large traders have been buying. The people with size, not super huge size, but pretty good size. And what do you know? We rally 60 handles off that low.
Nice. Nice live example. Okay, so Blake, everyone, Paulie, you are, Blake says you're a bulldog. And you are, and you know what? You love it so much. You could probably talk another couple hours straight about what you're doing. Really have come to know you better since you joined the firm and your work, and even watch some of your European videos, crossover videos. And I really think that you're an outstanding addition, and that people want to learn short-term trading. I don't think they could, do any better than this. How old are you, Paulie?
Thanks,
how old are you?
Huh?
How old are you?
Older. Old enough to buy a beer.
All right, buddy. Like me. And it was funny. It was funny seeing your.
No, all due respect, no, I'm not that old. But I'm just
yeah. All right, but you know,
I'm older than Blake. I'll say that I'm older than Blake. But anyway,
you are.
First time you asked him how old he is, he acted like he didn't hear the question. Second time,
yeah,
I wasn't dodging.
Anyway,
but, I'm gonna step away. Good luck and thanks for
best
having me
team on the net, right here, Forex Analytics. Anyone want to argue with that?
Nobody.
Yeah. Okay. So thanks for laying it all out on the court. Blake, Steve, Stell, Grega, Paul, Amanda, the whole team. Really, I mean, you guys assembled. I really think an outstanding team. And if you want to learn about the markets, this is a great place to do it. And here's your choice: pay the market or pay to learn. And it's a lot cheaper to pay to learn than to pay the markets. So that's my wrap. And
thanks, Dale.
Yeah, go ahead, Blake. Have a good
I was going to say thanks, Dale. Thanks for bringing us together each and every day throughout the week. So appreciate you.
It's a great. Thank you, Blake. So everyone have a great weekend. I heard some thunder and lightning out here today, Blake. So here comes the humidity, and just want to give you a little good weather news. And everyone remember, this is money. I know it's important, but count your blessings, not just your pips. And we'll see everyone next week. Have a good lineup for you guys of guests next week, including Ben Maldonado. And, the team's going to do what we've done every day, every week, every month for over 4 years to complete our mission is to build up and edify traders every day. Have a great weekend, team.
Thank you, Dale. Bye-bye.
All right, Steve. See you guys.